Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Wednesday, 10th September. Coming up on the show, Trump floats 100% tariffs on China, but could there be a breakthrough in trade talks with India? AI will fuel cloud revenue explosion at Oracle. That's the prediction from the company's boss. Shares are soaring in the pre-market. And Klarna looks set for its IPO. The listing means the online lender is now valued at $15 billion. So grab your coffee and let's own the morning. Well, the first thing you need to know about is inflation. The markets, which look like they are in a bit of a holding pattern right now, are braced for inflation data out later this morning. We get the release of Producer Price Index, or PPI, later this morning. Now, traders seem cautious ahead of the release, which could shape the Fed's policy outlook. It's expected to rise 0.3% on a month-on-month basis, a sharp slowdown from the 0.9% gain in July. On an annual basis, it's predicted to hold steady at 3.3%. Now, the next thing you need to know about is all about tariffs. President Trump has asked the European Union to impose 100% tariffs on India and China. That's according to the Financial Times. This latest news seems to contradict Trump's Truth Social post, where he claimed negotiations with India were continuing and will reach a successful conclusion. Meanwhile, the Supreme Court said yesterday it would quickly review a high-stakes legal challenge to President Trump's tariffs, setting up a resolution as early as November. And the final thing to know about is that President Trump can't fire Fed Governor Lisa Cook for now. A judge temporarily blocked the president from removing Cook, allowing her to remain on the job as she challenges Trump's efforts to oust her over allegations of mortgage fraud. The ruling means Cook can likely attend next week's Fed policy meeting and vote on whether to lower interest rates. Now, a lot of the focus in the tech world and possibly beyond was the Apple product launch event in California. Apple needed to produce something special, especially in light of its recent share performance. Well, the highlight was the introduction of a new slimline iPhone Air. More significantly, though, the tech giant managed to keep prices steady despite tariff pressures. Remember, Apple said that those tariffs will cost $1.1 billion in the quarter ending this month. Well, our tech editor, Dan Howley, managed to get his hands on a number of the new products.
Apple unveiled a host of new products at its big iPhone event on Tuesday, but the biggest of them all is the iPhone Air. It starts at $999, gets a 6.5-inch display. It really is incredibly thin and light. I got to hold it during the hands-on portion of the event. It does get a single camera around back, though Apple says you'll be able to get 2x digital zoom. It also gets the new center stage camera that all the iPhones get. That'll allow you to take both vertical and horizontal videos and photos using the front camera without having to change the orientation in your hand. The phones also come with improved durability all around. On the iPhone 17, you're looking at improved cameras as well as that ProMotion display that usually was only found on the Pro models. And then on the Pro models, you get all 48 megapixel rear cameras as well as a new 8x optical zoom. So that's huge. On the Apple Watch, you can now get hypertension detection. So if you have high blood pressure, over 30 days, you'll have to wear the watch and then it'll let you know if you may be showing signs of hypertension. And then the AirPods Pro 3, those now have heart rate tracking capabilities. All of these announcements happened today. We'll have to see how Apple's stock price reacts in the coming weeks.
Now, a lot of the focus in the tech world and possibly beyond the Apple launch was in, well, the highlight was, apologies for this. We're now going to move on to our market movers and we're going to focus on AI. First up, let's take a look at Oracle and just look at what the stock price is doing in pre-market. It's up around 30%, so over 31% so far. Why? Well, the software giant said its AI-fueled cloud revenue is set to jump to $144 billion by its 2030 fiscal year. That marks a massive leap from the company's projection of less than $20 billion for the business in its current fiscal year. The stock's gain comes despite Oracle reporting earnings for the first quarter of its fiscal year 2026 that fell just slightly below Wall Street expectations. In fact, Oracle's share price over the past year is up over 70%. It's been securing a massive amount of Nvidia's coveted GPUs, those AI chips, and renting out that computing power as it rivals big tech peers like Amazon and Alphabet. However, as the software giant has poured billions into its AI ambitions by investing in data center infrastructure, it's laid off workers and reportedly discussed eliminating cash raises and bonuses for employees this year. Another company with good news today that is AI-driven, Taiwan Semi. TSMC posted a 34% rise in August revenue. That shows that there is global demand for cutting-edge AI silicon. Remember that TSMC is Nvidia's main chip maker and is one of the biggest beneficiaries of the post-ChatGPT AI boom because of its central role in the production of Nvidia accelerators, the gold standard for training algorithms. The Taiwanese company is also the world's largest producer of the most advanced chips, including for Apple's iPhones. Well, at the Goldman Sachs Communicopia Plus Technology Conference, George Kurtz, CrowdStrike co-founder and CEO, and Yahoo Finance executive editor Brian Sozzi discussed the need for cybersecurity behind AI technology.
Security parallels the slope of the technology innovation curve. So with all these AI agents, essentially what are they? They're superhumans, right? They have access to data, they have access to compute, they have access to workflows, and they have access to systems outside the corporate network. All of that needs security, and that's what CrowdStrike does. Not only have we protected the humans and their systems for over 14 years, but now protecting all these AI agents and the proliferation of these agents as they cross the corporate network as well as external boundaries. So it's a massive opportunity, and certainly they're going to need security and compliance.
Opportunity for CrowdStrike, but it has to be almost terrifying for enterprise companies. They've unleashed agents inside their operations. I mean, they're trying to grow their business, but still, wow, I mean, there could be some real risks here.
I think there's opportunities, but there's real risks. It's almost like, giving full access to an intern and letting them run wild, right? Most people wouldn't do that, right? So you got to put guardrails around them. They can be very productive. And really where the industry is going, I think just in general with AI, is that the humans will manage a fleet of AI agents doing whatever task they're designed to do. But you're going to have to instrument them, right? If something goes awry, you're going to have to be able to roll it back and figure out what actually happened, so you need visibility. And you're going to need data protection, because we've seen so many times where these models are giving up information, prompt injection, which will allow the attacker to get information they shouldn't have.
Last time we heard from CrowdStrike a couple weeks ago, reported earnings, the guidance was in focus. The street didn't seem to like it, but I'm listening to you now. Has your business accelerated?
It has accelerated. And the thing is, when you look at the guidance, which was in line with what we talked about, there's still some impact to partner rebates, which we talked about happened this year, right? So
Is that from the outage?
That's from the outage, yeah. So essentially what we had to do is we had to compensate partners for some of the free products we gave away. Well, that's actually a contra revenue line item. It's just an accounting function. You actually have to deduct it from revenue. So it's more of an artifact of an accounting deduction as a contra item than anything else. You have to look at the net new ARR, which reaccelerated this quarter, 221, record for Q2. And then our CFO talked about 40% acceleration in the back half of the year. That's the most important number.
We'll have more from Brian at the Goldman Sachs Communicopia Plus Technology Conference when we come back from a short break. He also caught up with Bill Reddy, the CEO of Pinterest. Well, it's one of the biggest IPOs of 2025. Klarna, the buy now, pay later giant, is going public on Wall Street today. And it's another confirmation that fintech is staging a bullish comeback. Today, Klarna makes its debut, priced at $40 per share, above its initial guidance at around $35, bringing its valuation to around $15 billion. Now, Klarna is raising roughly $1.37 billion, with the IPO oversubscribed by up to 25 times, signaling strong demand. Its ticker on the New York Stock Exchange will be KLAR. And now remember, it's a remarkable comeback story. Klarna was once valued at $45 billion in 2021 before it sank down to $6.7 billion in 2022. So it's now somewhere in the middle. The firm continues diversifying beyond BNPL in net bill into debt, debit cards, savings, loans, even exploring a US banking license, positioning itself more like a neobank than just payments provider. Analysts point to Klarna's brand recognition and US push as advantages in a crowded competitive sector and say today's price could set the stage for gains if it holds. That said, profitability remains a concern and regulatory scrutiny of buy now, pay later models is intensifying. So does the Klarna IPO solidify fintech's big comeback, or will the thrill be short-lived? We are seeing investors making calls on both sides of the trade this morning, and we'll continue to cover the story here on Yahoo Finance. Okay, and there's another asset we're watching closely this morning, gold. It keeps climbing to new highs. Keep an eye on futures to see if it crosses another milestone at $3,700 there. If September is usually a lower return month for investors, our senior reporter Inez Ferrer told us last night what investors can expect from gold and how it may affect crypto.
It tends to be a weaker month for crypto. You have seen, as you mentioned, gold going higher because of Fed easing expectations. There's also been a sort of fleet from fiat currencies into assets like gold and also Bitcoin as well. I mean, you have seen Bitcoin at around 112,000. It's been in a consolidation period, but gold has definitely been the front runner. And Wall Street, there's some analysts out on the street that also talk about the fact that you tend to see gold front running Bitcoin historically. So it'll be gold first, and then it'll be Bitcoin that will sort of catch up. And that may be what happens if history is any guide in October, because historically October tends to be a better return for assets like Bitcoin. But certainly when you're looking at gold prices right now, you are seeing some analysts talking about gold being in overbought territory. It'll be interesting to see what the inflation print comes out to be, because if it does come in soft, then you could see bets for a 50 basis point cut go higher rather than just a 25 basis point. And so then you may see the dollar going lower and then gold going higher. But look, if the dollar continues to stay weak, then this tends to be positive for assets like gold and also like crypto.
Well, let's take a look at stocks making big moves this morning. Our first one up is GameStop. The meme stock is now trading up a lot higher in pre-market. Last time I checked, it was up over 10%. But what's getting investors excited? It's the GameStop reported its fifth straight quarterly profit. Revenue jumped 22% year over year, led by collectible sales, up more than 60%, and hardware up more than 30%. Net income surged to $168.6 million from just $14.8 million a year earlier. The company also announced a special warrant dividend worth up to $1.9 billion. It's the latest sign that GameStop's turnaround strategy is yielding some results, though investors will be watching if this momentum can become a more stable trend beyond the earnings pop. Okay, second up today, Synopsys. It's one of the biggest players in semiconductor design software, and like several other AI software companies this month, it's facing major challenges. Synopsys reported soft earnings guidance as restrictions on the sales of US chips to China weighed on demand. Shares slid sharply, down more than 22% are in pre-market and are still falling, still under pressure this morning, trading well under $500 in the pre-market, as you saw there earlier. The company's third quarter results fell short of expectations. Revenue came in at $1.74 billion versus forecasts of $1.77 billion, and adjusted earnings of $3.39 per share missed estimates. But the share price this morning is a stark reminder of just how high the bar is in today's AI cycle. Okay, next up, and the last one, it's Chewy. How is that doing? Well, it's the dog food company. It was up 4% in pre-market before it reported earnings this morning, which have just come out. And even though they were in line with what we were expecting, shares down there over 7%. Sales actually rose by more than 8%. And so a bit of a surprise that the shares have reacted so negatively, considering that the numbers did meet expectations. But it just goes to show you Wall Street wants more than just meeting expectations right now. Okay, and let's have a look at... And okay, now let's go to our break. We're going to go back to the Goldman Sachs tech event with Brian Sozzi when we come back. He's talking to the boss of Pinterest. Welcome back to Morning Brief Market Sunrise. So how are companies changing to make themselves ready for the AI era? A lot of companies are shifting their strategies, including social media firm Pinterest. Yahoo Finance Executive Editor Brian Sozzi caught up with the CEO of Pinterest, Bill Reddy, at Goldman Sachs' Communicopia Plus Tech event.
Enjoyed your discussion this morning here at the conference. A lot to talk about AI, and I came away thinking, I'm still thinking of Pinterest as a social media platform, and it's not. That's not the message I got from this.
No, that's exactly right. I mean, first of all, we've had a significant resurgence of the platform. But at the core of that is really visual search and shopping, where we now have, we put up 8 straight quarters of record high users. Gen Z is now more than 50% of the platform, our largest, fastest growing demographic. And at the core of that is they're coming to Pinterest because they're getting really great AI-enabled shopping recommendations that are personally relevant to them. And that has really taken hold. Adobe put out a study, independent of us, that 39% of Gen Z thinks of Pinterest as a first place to go search. And that really is about the visual first search experience that we're creating, really centered around personalization and shopping and the unique curation that happens on our platform. But it's really, really working well with users.
The competition for, as they would say, eyeballs, I mean, it's intense. I mean, there's Meta out there, Snap, they're out there doing something. There's YouTube, there's video content out there. Did something happen in your business the past 2 quarters that you are now at record MAUs? It seems like there was an unlock over the past 6 months.
Well, I think it's been, I'm 3 years in, just over 3 years in as CEO.
Can't believe it, 3 years
and
already.
yeah,
Oh, wow.
And this has been the strategy the whole way. But we've continued to build more and more. The personalization, the AI, the shopping experience just keeps getting better. Our visual search keeps getting better, and so it's 8 straight quarters of record users. And Gen Z has been our largest, fastest growing demographic for a little while now, but it's now more than 50%. We're growing across every generation, every geography that we track, and it is, just the AI advantages are compounding, especially off the really unique signal that we get, where we talk about our taste graph has grown more than 75% over the last 2 years, which is, hundreds of millions of people come to our platform every day. We're now almost 600 million monthly active users, and they come to our platform and they're styling outfits and designing rooms and making product associations. There's just completely unique signal that doesn't exist on any other platform in the Western world, and that lets us do really unique things with the AI. So a specific example of that I shared on our last earnings call, our latest multimodal visual search model that's in-house, proprietary, and trained off our unique curation signal outperforms off-the-shelf models by over 30 full percentage points on the relevancy of its shopping recommendations. So we're not competing for general purpose AI or ask the AI anything, but for shopping, where we're really focused, we're able to outperform on that visual search, on the relevancy of the shopping recommendations by 30 full percentage points. So these kinds of things are tangibly the compounding benefits that we're seeing in both the AI and that unique curation behavior on the platform.
Is Pinterest an AI agent in its own right?
So we don't use that term because it's not how our users speak. So AI agent,
I don't hear it anywhere like in a retail store.
in Silicon Valley, you'll hear it all the time, right?
And in this room.
But go walk into a shopping boutique and you probably won't hear people talking about agents. But what is true on our platform is that, if you ask a Gen Z user why they come to Pinterest, one of the first things they'll say is well, Pinterest just gets me. Well, what's behind that? It's the AI, but it's also we're shopping on their behalf all the time. And every time they open the app, there's great new recommendations that are not just the serendipitous discovery of the thing you didn't know you needed, but actually where people are coming with intent and they're starting a journey, but then we're helping them finish that journey, and then we're making the buying more and more seamless. For example, with Amazon, you can link your Amazon account, and then you can press a button to buy right inside of our platform. You're buying from Amazon, you're gonna get a great delivery, but you can buy immediately right in our platform with just a single tap. So we take the user down that purchase journey, great recommendations, and they're one tap away from a purchase, and so that's really resonating with users.
What's next for Pinterest next year in AI?
Well, so there's a lot more to go here. The visual search capabilities that we've created work beyond just fashion and apparel and some of those shopping use cases. We're seeing new categories emerging, travel and autos and things like that. And so we've talked about how men are growing on our platform. The number of men on the platform is really growing as well. We've historically skewed towards women, which is great. We continue to deepen engagement there, but we're getting more men on the platform.
I care how I look.
Categories.
I'd style an outfit off.
Well, yeah, and there's things, whether you're buying, apparel or a watch or a car or thinking about where to go on vacation with the family, these things are very visual journeys, and the power of the visual recommendation engine using AI and those unique signals that we have, it's really resonating broadly and globally.
You've seen a few tech cycles in your day. Where do you think we are in this AI cycle?
Oh, I think we're still very much in the early innings of this. And so I think there's a multi-year runway on this. I think it's, as bigger than mobile and social were. And so I think there's, many years of runway ahead. The thing that I feel really great about is I think we've carved out a really unique space for ourselves in this shift toward AI, where you've had huge adoption of new AI tools over the last 2 years. And over those last 2 years, we're more popular than ever. Because even as people are using chatbots and things like that more, they're also looking for other new AI-enabled experiences. And so for a visual-first shopping experience that's going to be really a great personal shopping assistant for you, which is what Pinterest is doing, that's resonating deeply, and not just with Gen Z. We're growing across every generation and every geography, so it's resonating globally as well. And so that's a big opportunity for us also, where we have almost 80% of our users outside the US, but only 20% of our monetization there. So we're really ramping up that international side also.
I'm sure some of the risks that I'm hearing at this conference with AI is that it will eat software companies for lunch. Hallucinations will continue. What are some of your biggest concerns about AI as it really continues to proliferate in companies and the world?
Well, I think certainly will drive a lot of disruption, right? And I think you've seen that happening, but it's also going to drive a lot of human creativity. I'm a firm believer that AI is not going to replace people. People who use AI are going to replace people who don't use AI. And so I think there's a lot of human potential that gets unlocked with AI. At the same time, I think guardrails are important. One of the things I'm most proud of is that it's not just that our business is better than it's ever been, and that we're at record highs on users and revenue and all these things. We've done it while also investing in the well-being of our users. We've done, tuning AI for positivity. We've done inclusive AI. We've done private only for under 16 because we said, it's just not safe for children under 16 to be contacted by strangers online. So we're gonna do private only. And these were very contrarian moves, but we said it shouldn't be unique to invest in the long-term well-being of our users. And so with AI, we're also making sure that we tune AI for positivity, that we're making it safe, and that we're making it so that it is helpful and additive rather than addictive. And even as we've done those things, we're proving that there's a good business on positivity, that we can do well by doing good.
Good to see what you're working on. Good to see you in general.
And that's all we have time for on Market Sunrise this morning. Stay tuned to Yahoo Finance. I'm Ramzan Karmali. Go own the morning.